Is the stock market headed for a melt up ever since the presidential elections? And are we going to start to see more peace around the world at a time when the S&P 500 and the Dow Jones are clocking out new all-time highs? Last week, we saw all the sectors in the green and by quite a large margin. Industrials were up almost 6% on the week. Now, right before the presidential election, we saw the fear and greed index over into fear territory, and in one swoop, boom, right back over into greedy territory. We also come over and take a look at the investor sentiment survey. Also flips more bullish once again, and it seems as if investors and traders are starting to get more and more bullish on the potential for policy changes moving forward. Now, Tesla stock has definitely benefited from not only good earnings, but also Trump being reelected. If you look right here, we have several ABC patterns already marked off, and Tesla has smashed through all those ABC projections. And a lot of people are going to say, Mike, this is a little bit overextended. Tesla has to pull back. Look at the big, large gaping gap below us. We talk about this a lot during the live streams, and that's the fact that when we get a large gap, it normally takes quite a while before that gap is going to come back and get filled. Now, even Bitcoin was able to rally to a new all-time high after the US presidential election. We look at the SPY sitting at all-time highs. We look at the Dow Jones sitting at all-time highs. We take a look at the QQQs sitting at all-time highs. What's not sitting at all-time highs, however, is the Russell 2000. You might say, Mike, look, it's right at all-time high. When we dive down and start looking on the monthly chart, we can see we have not taken out that monthly candle that put the high in back in November of 2021. However, we are within that wick, and seasonality wise, and with a presidential election, normally we are going to see the Russell 2000 start to get some strength into it. Now, if we come back over and we look at Tesla stock real quick, we've already looked at this on the daily chart. But look at this on the monthly. The monthly looks like we have a little bit further to go. If we simply grab our Fibonacci extension tool, we measure A to B, B to C, and we project up here for D. On the monthly time frame, we will complete the ABC pattern right up here at 337.99. Now, do we get there this week, or do we start to pull back? If indeed Tesla wants to start pulling back, here's going to be an area to watch off this monthly chart. I'm simply going to draw it from this candle wick right down here to the candle body and go ahead and extend it to the right. That's going to be anywhere from 300.59 down here to about 278.77. Now, I want to bring this stat to you guys' attention as well. This comes to us from Wayne. I got this off of Twitter. And what it basically goes on to say is we are entering a very, very bullish period of time. Whenever the trailing S&P 500 is up more than 10%, then look at the results. All right, if we look at November 12th through the 19th, which would be this coming up week, out of the last 33 occurrences, we have been up 23 of those. However, I want to turn your attention and look at the full next 7 weeks, going all the way until the end of the year, December 31st. Look at the stat. Normally, when we get this type of setup taking place, we have been up 29 times out of the last 33 occurrences of it. So with all the optimism out there with the stock market, it's not far-fetched to think that stocks could have a lot further to go. Now, when we come over and look at the S&P 500 versus HYG, high-yield bonds, what do we see? Well, high-yield bonds starting to turn up higher. However, as the S&P 500 has been up here making new all-time highs, look at the high-yield bonds. Are they making new all-time highs? No. So that is basically setting the stage that we are setting up some type of divergence. Now, does that mean the divergence is going to play out right on Monday? No. And keep in mind, Monday is a holiday. The stock market will be open, but the bond market will be closed. So expect low volumes in the markets. As we come back over and we start looking at the yield curve, notice the red line right here. Will the yield curve reinvert? Right now, if we were to draw an ABC pattern, that actually suggests that it is likely the yield curve is going to reinvert. Now, keep in mind, the stock market normally has problems when the yield curve starts to steepen, and now we just are simply not seeing that at this moment. We also come over and take a look at the Dow Jones Industrial Average versus the Transportation Index. As the Dow Jones has been clicking away to another new all-time high, notice the Transportation Index has been able to break out from this declining trend line and also been able to push up towards recent highs. So basically confirming the move for the Dow Jones at this moment. Now, even though I don't trade Bitcoin, I still watch it on the weekends to try to get a game plan ahead for what is likely going to happen when the futures markets open on Sunday night. Now, right now, as I'm recording this video late on Saturday night, I can see Bitcoin is up $2,800. And if we go ahead and put Bitcoin on the monthly chart, could this be a large ABC pattern on the way up? If we go ahead and we draw that out, that would give us a price completion on Bitcoin right up here about 108,945. So will we see Bitcoin hitting that price point or not? Now, when we look at this on the 30-minute chart, we can see Bitcoin is getting one heck of a rise on the way up. We come over, look at the dollar index. We have now had back-to-back inside days. We see that large candle from election night. The next candle, the high and low were contained within that large candle. Then on Friday, the high and low was contained within Thursday's candle. And keep in mind, with the dollar index or any instrument for that matter, when you have inside days, expect a breakout or breakdown from this pattern. And we're going to see, do we continue to see strength out here in the dollar? Also, what else we want to pay attention to this week? We want to pay attention to the 10-year yield. If the 10-year yield continues to get more strength under it, then that could also be a problem for the US economy moving forward. However, in the short term, we have a sugar high taking place from the presidential election. Now, I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment, but if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. We come over and take a look at crude oil, and crude oil on Friday was down almost $2 a barrel, trying to get its way back down. Now, something we talked about during the live streams, could this be an inverse head and shoulders that is about to set up? Left shoulder, head, right shoulder right over here. And if you want to make sure you don't miss the next time I go live, make sure you're subscribed and the bell notifications turned on for all. So what I want to watch for crude oil this week is, does it start to firm up? Does Iran stop all the rhetoric over in the Middle East, and do tensions start to simmer a bit? Or are we going to continue to see escalations in the Middle East? Hopefully not, right? Hopefully, things start to simmer down. When we look at the economic calendar for this week, look at Monday, no major economic news. Both Canada and the US have a bank holiday. We come over and look on Tuesday. Tuesday, we have FOMC members speaking throughout the day. Then on Wednesday, we have CPI, or should I say CPI data coming out. On Thursday, we have core PPI coming out along with the weekly unemployment claims. We also have Powell speaking. I don't think Powell's going to be a big market moving event. I don't think Powell's going to say a whole lot more than what he said during the FOMC. And then we look on Friday, and Friday, we essentially have retail sales coming out along with the Empire State Manufacturing. But if we come back over here real quick and we take a look at Wednesday, where we had that CPI data coming out, I want to remind you guys of something right here in the BLS's own documents. Sampling errors in the CPI are a real thing, okay? And so when we say CP lie, maybe they're not lying to us. Maybe, just maybe, they're sampling errors. You guys let me know what you think in the comment section down below. Are they blatantly lying to us, or is it nothing more than a sampling error? Jay Powell wants to keep telling us about how great inflation is in terms of coming down. But if we continue to increase, or we're basically holding steady, are we really coming down? Maybe we're coming down a little bit from the spike that we saw at the beginning of the year, but we're still holding up. All right, we do not see any relief. So this week, it's going to be important. What are we going to see in terms of what is taken away? Now, keep in mind, something that helped the CPI report the last go around was energy prices, which made the CPI data look a lot better than what it could have been. And what do we see with crude oil? We see crude oil going down once again. So maybe, just maybe, that is going to pour more fuel on this rally out here in the stock market. Now, whenever I see articles like this, I start to get concerned. Roaring 20s on Wall Street could extend into 2030 after likely Republican sweep, market veteran says. And the reason I want to caution you on this, when too many people are over optimistic, that could spell trouble out here for the stock market. We take a look at the Dow Jones real quick, and I want to start off actually looking at the weekly chart. And we look at the candle, big bullish candle to new all-time highs, closing in the upper third of the range. We got to give it up for the bulls on that front. We look on the daily candle. We have a little bit of a wick on Friday's candle, and we had this large gaping gap down below us. Now, as we dive down and start looking at the 1 hour chart, notice on Friday, we were able to push to a new all-time high, but look at the MACD indicator. Did it make a new all-time high? The simple answer is no. That's giving us a heads up. Momentum to the upside is starting to weaken here just a bit. Then we look out here on the 30-minute chart. this is going to be dangerous out here for the bears. And what it could be is if we stay up here at these upper levels and the MACD indicator gets down towards the zero line, watch out. That could be nothing more than a recharge point for the market to head back higher. Now, like we talked about earlier, small caps could be in focus. When we look at small caps on the weekly chart, essentially closing right here near the upper end of the range, almost at the tippy top. We look out here on the daily chart, we can see a big bullish candle on Friday, but the two candles before it are a little bit concerning. First one was a hammer candle after a large gap. The next one, kind of a shooting star type of candle, a little bit more of a wick to the downside than I would have preferred. And then on Friday, we get that bullish candle on the way back up. But when we zoom in and actually look on Friday's candle, it really is nothing more than an inside day. And that could set the stage that we're likely going to get a breakout or breakdown from this pattern very early next week. Down here on the 1 hour chart, we can see that MACD divergence, similar to what we saw out here on the Dow Jones, where price came up and made a new recent high. However, the MACD indicator just making a beeline, trying to head back lower. On the 30-minute chart, you can see this upper level consolidation that we've had, and the MACD indicator is almost back at the zero line. So is it time for the Russell to go ahead and join the cool kids club and get back to making new all-time highs like the other indices out there? Now, when we come over and look at the Qs on the weekly chart, notice we smashed the ABC pattern out here at 510.33. We also closed very close towards the top of the range out here from the last week. So we got to give it up for the bulls on that front. On the weekly chart, though, we do have some divergence setting up. Then on the daily chart, you can see a very small candle on Friday, but we still close in the upper third of the range. You got to give it up for the bulls. Now, here's where it starts to get dicey. We look at the 1 hour chart, we're starting to roll over as we're pushing new all-time highs. But on the 30-minute chart, I want you guys to pay close attention. We have one gap, we have two gap, we have three gap. So we have three consecutive gaps that have not been filled. So I would not be the slightest bit surprised if this week we come down and at minimum fill one of the gaps. If we pull our Fibonacci retracement from the swing low right up here towards the swing high, notice where the 38% level comes in, way below that first gap being filled. And the 50% level would come in down at gap support, down at the second gap. So let me know in the comment section down below, how many of these gaps do you guys think will get filled? None, one, two, or all three of these gaps this week? Then as we come over and look at the NASDAQ futures, you can see that was one heck of a move up. Look at that weekly volume profile. We had a weekly range of 1,252 points. Now we have several minus development areas within this profile. At some point, will come back and get tested. Now, is it going to be this week? I don't know. We have to see some very disappointing news out from the CPI data. Remember the stat I shared with you guys earlier. We're in a very, very bullish period of time. So let's try not to fight the tape. Also, the weekly value area high will be up here about 21,265.00. The point of control is going to be down here at about 21,220.50. Value area low, though, is going to be way down here, which I do not see us making it down here this week, at about 20,306. I don't see any way we make it all the way that low this week. Now, when we come over here and we start looking at the daily profiles on Friday, we basically had a D as in dog shaped profile. And as I zoom this up a bit, we can see this a little bit clearer. Now, notice we closed slightly below value area high on Friday, but I want you guys to pay attention to the shape of the profile. That normally indicates, D as in dog shaped profile indicates we're likely going to get a breakout or breakdown from this pattern. And we have value area high sitting up here at about 21,236.50. The point of control is at 21,220.50, with value area low being down here at 21,185. Now I want to zoom this chart back out here just a bit, and hopefully you guys can see this point of control down here at 20,795.50. Now I'm not that excited about this target getting hit just yet. However, if we start breaking to the downside and we can stay below value area low, that could be a course of action for a runner target. However, I think that would be a multiple day event unless maybe we get some type of escalations over in the Middle East. Now, when we come over and look at the SPY, big bullish candle out here on the weekly chart, closing near the upper end of the range. And again, you got to give it up for the bulls. That is a win for the bulls. On the daily chart, you can see a little bit of a wick on top of that candle, but I would say we close right around the upper third of the range, just barely. And you can see that last week, we barely missed hitting that 600.70 ABC target, but we did smash through the 595.31 price point. Now, similar to what we talked about with the NASDAQ, there are several gaps below us that at some point will come back and get filled. On the hourly chart, you can see we have a little bit of divergence with the MACD also starting to cross over. But on the 30-minute chart, we can see gap number 1, gap number 2, gap number 3. And notice the last 2 days, Thursdays and Friday, the range on those days definitely shrunk, which could also be a sign that maybe, just maybe, we're going to start some type of pullback this week, and we'll see just how far it goes. Now, one of the things I would want to do is pull a fib from the low all the way up here towards the high. Now, if we take out the high next week, we'd have to readjust that Fibonacci level. But right now, the 38% level comes all the way down here at about 587.60. Now, I don't know if we're going to make it down there this week or not, but one of the targets I will be focused on this week is going to be playing this gap area in the S&P 500. Now, as we look at the futures markets real quick, we had one heck of a range. We had 316 points of range. And if we actually zoom this out a little bit, let's see the last time we had a 300-point weekly range. And I'm still scrolling. I don't see it. I still don't see it. We're all the way back to July. I still don't see it. And I really don't see a range that large this week. We've had a couple of 240-ish point ranges or so, but for the whole entire year, this is going to be the largest ranging week that we've seen out here. And if you notice, it was very large, enough to take us all the way up here towards all-time highs in this market. Now, one area I am going to want to focus on this week is going to be this point of control at 5995.00. Now, the value area high will be 6,040.50, with value area low being way down here at 5803.00. Now, I'm not really in the cards where I think we get a full volume profile rotation this week. If anything, I think maybe we back and forth a little bit, slightly go up, maybe try to make a new all-time high. But I do want to focus on some of these minus development areas, which you'll see us talking about quite often during the live stream that takes place during the New York session. Now, this first area is going to come in right down here about 6,013.50. That's really nothing. The next area is going to be down here about 5983.50. This is the area where I'm really going to start to get excited about the market. Now, ideally, I like to see this area all the way down here being tested. However, I think we're going to have to see some negative economic news in order for the market to make it down that low. We come over and we start looking at the daily profiles. We see late on Friday, we started to get that roll effect, and we have value area high all the way up here at 6,037.00. We have the point of control at 6,025.50, with value area low being at 6,012.50. Now, what I like about this value area low, it is also very close near this minus development area on the profile. I'm going to be trading Friday's profile as a D as in dog shape profile, even though it's not 100% the way I'd like to see it. I think it's closer to a D-shaped profile than any other shape out there. Now, if we can start breaking through value area low, I then would want to target the lows from Friday. But then as we zoom this out, in Thursday night's video, we talked about we had 3 consecutive untested point of controls. 1, 2, and then the one on Thursday. Well, on Friday, we were able to take that level out before the market opened, and then we rallied up to a new all-time high. So let's not forget, we still have that point of control down here at 5934.25. So if we start to see a pullback in the market, that is most certainly going to be a point of interest. And as we come back over and we look over on the weekly profiles, notice if we measure from the swing low to the swing high, assuming this is going to be the high in the market and we don't go higher, the 38% level comes very close towards that area that I'm very excited about. Now, I just think it's going to take a little bit more work before we make it down towards this minus development area, which comes in at about 5,900 down here to about 5,893. Now, if you guys like to see how I lost over $2 million in 2 trading days trading the futures markets, watch this video right here.